Hi, my name is William Smith, President of Legacy Empowerment Group.
And my name is Nicole, attorney at Berman, Sylvan, Rose, Feldman, and Darby.
I'll be talking about life insurance and how to leave a proper legacy.
And I'll be talking about estate planning and how to protect your life's assets.
A lot of my clients sitting there meeting with me. We get through the life insurance stuff. I say, do you have a will set up, a estate set up? They look at me like I'm crazy. Help me out here.
That's probably because they have no idea what you're talking about. Some people, they don't know what an estate plan is.
Right.
Or they say, well, I don't have anything, so I'm not planning for anything.
That's exactly what they say.
So an estate is essentially anything you have an interest in. So the cash in your pocket,
Okay.
the car in your name,
Right.
If you own a home, the home in your name, your life insurance policy
Got
is an
it.
estate asset. So planning for your future, plan for if you're going to pass away, or plan for in the event you can't make decisions for yourself. So that's what an estate plan is. So there are 3 documents that basically cover that.
Okay.
You have a will, so when you're planning for your death, and then you have a medical advance directive or a power of attorney. So those 2 forms are if you can't make decisions for yourself.
All right, so I'm a millennial, 29 years old, making $100,000. I'm single. Do I need an estate plan?
Well, you may not know this,
Okay.
but there's already a plan for you.
Really?
Right, yes. So if you don't take control and plan for your own documents, essentially the government has a plan for you in the event that you pass away as to who's going to get all of your $100,000.
Really?
Yes. So the question is, do you want to control where your assets go and who they go to, or do you want the government to do that for you? I mean, no matter what, there's a plan. It's
Okay.
just, what should my plan be? What's the best plan for me?
So if you can give me an example of like a scenario you ran into that's common, that's like a little misstep that people may make.
You and I are married,
Right.
okay?
Which we're not, by the way.
Which we're not, yes, we are not. You and I are married. Let's say you have your own child, I have my child,
Right.
okay? So we end up buying a house together.
Yeah.
It's natural.
Yeah.
The house is in both of our names,
Uh-huh.
right? So I'm just gonna say, I don't really have too much, everything's gonna go to you. You think it's gonna go to me, it's no big to do. That's my plan,
Yeah.
right? So generally what happens is, because we decide not to get a will, this is what we're gonna do. The house, if I was to pass away,
Yeah.
automatically goes to you because
Really?
it's joint,
Okay, that's
right?
great.
So if one person passes away, it goes to the surviving joint owner. That would be you.
Yeah.
What I don't even know that I'm doing is I am essentially disinheriting my child, because when I pass away, it automatically goes to you, and then when you pass away, it's going to go to your child. So what happens to my child's share?
Ah.
So that's why it's important to understand what it means when you say, I don't have anything, I don't want to plan for anything, because
Right.
what is set up for you may actually not be what you expect.
Got it. So that's why it's important to have a really complex will.
Yeah, I mean, just having one is essential.
Okay.
So when you meet with an attorney who is experienced in drafting estate planning documents, they're going to walk you through, it's a really good one, they're going to walk you through, what it means in your situation with your assets, with your family situation. So that's the difference. You should have one regardless if it's simple, complex. It's going to be whatever you need or whatever you want it to be.
So we talked about a lot of complex terms just now, different stories, right?
Mm-hmm.
So give me the exact documents that we need and what do they really mean?
Okay. So what I consider a basic estate plan is you need a last will and testament.
Gotcha.
So that's basically the document that allows you to name someone we call a personal representative or an executor. But that person basically is the one who's going to control administering your estate, making sure that the people you choose in your will are going to receive your assets.
Okay.
You also get to choose who those people are. The next 2 documents are the power of attorney form. So everyone pretty much knows what that document is, because it deals with who's going to get into
Right.
your bank account. So
Well, who's cuts the cord too, right?
nope,
No?
that's the advance directive.
Ah,
So both
okay.
of those documents are documents you use during your lifetime. So
Okay.
if you can't make decisions for yourself, the advance directive is naming someone who's going to be able to speak for you because you can't speak for yourself. And the power of attorney form is going to allow someone to handle anything other than medical decisions. So that means getting access to your bank account, selling your house. So those are your 3 basic estate planning documents that you should have, because it covers different points in your life.
All right. Now I hear a lot of people talk about these trusts, right?
Mm-hmm.
Now you have an opinion on trusts. You say some people don't need them, but break that down to me, please.
Okay, so 90% of the people that come see me think that they need a trust.
Because that's a buzzword.
Yes.
All right.
Yes. I mean, they've heard it from a friend who said, like, it's the best thing since sliced bread.
Right.
I have one. You should have one.
Yeah.
There's other people in social media that speak highly of them. They're great tools if you need them.
Okay.
So you can have one for convenience. Essentially, a trust is a document.
Okay.
It says anything that's named under this name of the trust. So the Nicole Slaughter Trust, anything that I title.
That sounds dope, though.
Yeah, it does. It sounds great. It's great for the purpose of bypassing probate.
Okay.
So what that means is if you have a will, everything is going to be probated. That means that the government is involved in making sure that your assets go to whoever you choose. If you have a trust, that means that whoever you chose as the trustee is going to make sure that your assets that are titled under the name of the trust go to whomever you choose. So the difference is you're not checking in with the court with it, about anything. The beneficiary just check with the trustee. Hey, I heard I'm a beneficiary. Do I get anything? What does that mean? When am I going to get it?
Right.
So the trust is great for bypassing probate. That's a convenience mechanism. That's basically saying I don't want the government involved. I think it's going to be too much money to get them involved. I'll just have a trust for that. Some people need it because they have multiple properties in different states.
Right.
So people don't know, like, for real property. If I have a vacation home, let's say in Florida, and I have a home here in Maryland. So I'm thinking a trust is great because I don't have to open up a probate in Florida
Yeah.
and in Maryland because you can't just move a house.
Right.
So you have to open it up every place that you have a real property. And for that reason, a trust is great because you bypass probate.
Yeah.
You don't have to open up a probate in Florida. You don't have to open up one here. So long as both of the houses are named underneath the Nicole Slaughter Trust, as soon as I pass away, they go to page 5. After Nicole Slaughter's death, we're going to transfer the assets to A, B, C, D, and E. So it's simple to do. It's just a little bit more expensive than your last will and testament because you're doing something more fancier.
All right, so Nicole, another thing I hear, right? People say, I'm getting a trust because I don't want to have to pay taxes on my estate. I don't want my kids having to pay taxes and stuff, so I got this fancy trust. Talk to me about that.
That is not true.
What?
You're paying taxes regardless. It's the question. You can save taxes through different mechanisms.
Okay.
You can save taxes in a will. You can save taxes in a trust. It depends on, obviously, how many assets you have. Some people tax may not even be a concern. So you can save taxes, but
Okay.
it doesn't mean that you're automatically not paying them. So I have a life insurance policy.
Right.
I got it through one of those phone calls,
Right,
we have a policy, you can get $30 a month, and it's $500 for 30 years. And I thought, $500,000? Great.
Right.
But I don't even know what it means, why I need to have one.
Right. All right. So those commercials that you see on TV, 9 times out of 10, those are term policies, right?
Okay.
So you did a good thing by buying a life insurance policy, especially because you have a child, correct?
Mm-hmm.
All right. So those policies, the term policies, they have huge face amounts in most cases for a little bit of a dollar amount, right?
Okay, good.
But the thing that policy won't do for you, it won't build a legacy for you. Okay?
What
You
does that
understand?
mean?
What that means is this. Most times those policies have caps on the amount of years that you have, right? So you can have a 10-year, you can have a 15-year, you can have a 20-year, you can have a 30-year.
Okay.
Right? And so that after that time frame is up, those policies will not be enforced at all anymore.
Well, why can't you just get another one? Another term one after the 30?
Because when you got it 9 times out of 10, most people that buy term policies, especially the 30-year ones, get them in their 20s or their 30s, right?
Okay.
And then once you get to your 60s, that policy decreases. So what you see in especially in a lot of African American households, you'll see somebody 60 years old. They're like, yeah, I got life insurance. They don't think about it ever again, right? They die, there's no life insurance. Well, they call a life insurance company, policy. Oh yeah, she had that policy. That policy is no longer enforced.
Wait, but are they going to tell me that when the time comes, or?
Some do, some don't. But this is what happens in a lot of cases. What I see, right? I'll get a 60-year-old client. This happened to me just the other day. A woman called me. She said her term policy is expiring in 1 year, right? So she just assumed because she had a $200,000 term policy that she's been paying on for the last 30 years, paying $50 a month, that she could just get another policy and still pay the same thing.
Okay.
All right, now you're 60. She's going to be 61 in that case, right? She can't get a term policy that's going to last her 30 years anymore. The most she can get in this case now is a 10-year policy, right? For that particular company. Because different companies do different things, right?
Okay.
But now this woman is a diabetic. This woman has had kidney issues. So a term policy is not an option for her. Now all she can get is what's called a final expense policy. And those cap at $50,000.
That's not enough.
That's not enough. But in addition to that, because of her age, she's going to be paying, in that case, a couple $100 a month.
That's definitely
You see what I'm
not
saying?
what I want to do.
And so that's why it's important for you to have a strategy when you're buying your life insurance. Term is not a problem. It's good. But you want to get with an agent that can give you a strategy, because with the term, you also want to have a certain amount to protect the assets that you have, like we were talking about earlier. But then you also want to get a whole life policy or universal life policy, and there's different strategies for that, to be able to build beyond that age of 61.
Well,
you see what I'm saying?
I mean, I get it, but I heard that whole life policies are more expensive.
Yeah, they're definitely more expensive. And the reason why they're more expensive is because the life insurance company knows 9 times out of 10, they're going to pay this money out. When they give you a term policy for $500,000 for $20, you think the life insurance company really thinks you're going to die?
Probably not.
Exactly. So that's why they price them at that rate, because they know most times people are either going to outlive the policy, or people are just not going to pay their premiums.
Okay.
You know what I mean? But they know from their research that, all right, this person probably is not going to die.
Okay.
That's why they give it to you at that rate. And then most times with a term policy, especially the really cheap ones, they make you take a medical exam for the high dollar amount.
Okay.
You see what I'm saying?
So is whole life really for my whole life, or is that just a term?
So it's different types of whole life. There's different ways you can put it together. So some whole life policies you do have to pay your whole life, right? But there's also whole life policies where they can have a paid up amount, right? So I have one now, right? Where you can pay up, it gets paid up at age 65. So you pay for it from now
Okay.
until the age of 65. Once you're 65, that policy you don't have to pay on it no more.
Ah.
Yeah, but it still lasts your whole life, even though you're not
Got it.
paying.
But what if I don't reach the age of 65? Then what happens?
Well, you die, your kids get the money.
The full, it doesn't make a
They get the
difference.
full amount. They get
Oh.
the full amount, yeah.
Yeah, well, we can look into that one.
Yeah.
What was I thinking?
So, just to take the story a little bit further, like in the 60s and the 70s, African Americans in a lot of inner city communities were not allowed to buy things like whole life policies. They were buying things like burial life policies, industrial life policies, right? So if you talk to an older person in their 60s now, 9 times out of 10, they'll tell you they remember the insurance man coming to their door and collecting money on a monthly basis. Most people, any inner city community, because the companies would send out guys, they would sell these industrial policies, and they'll be taking the money, but the policies would be like a $5,000 policy, right?
Just enough.
Just enough to bury it. But what that did is it took the vision away from wealth building.
Okay.
And so, there was no wealth building going on in the African American community. It was always burial. You just need enough
Just
for
the
burial.
minimum.
Just the minimum. So I was in a meeting one time. We had a big insurance office down in Alexandria, and it was a lady that came to one of our meetings, and she bought her industrial life policy to the meeting.
Wow.
And this woman was in her 70s, and she was like, "This right here was sold to me 40 years ago," and she showed it, and she's like, "And I've been paying on it ever since," right?
Wow.
And she showed it. The policy was $3,800.
She's been paying on. So she's paid way over.
She's paid way over, but that's what they used to sell. They used to sell African Americans that. So like the lingo for wealth building is not it's not popular in African American circles, until now. We're starting to get more exposure. Well, we have a lot more exposure now, of course. And so wealth building is something that we're starting to practice. We're starting to apply it, and you can see it, in different, just in life in general. Most African Americans, when it comes to getting money from friends and family rounds, like for example, in the technology world, or even in the small business world, a lot of money is raised for bigger companies, startup companies, is raised with the friends and the family, that first round.
Okay.
A lot of that money comes from the states.
Okay.
Trust. Let me give you an example, Nicole, why wealth building is so important.
Okay.
I went to the University of Maryland, right? One of my good buddies, we graduated same time, doing the same thing. When we graduated, he had $200,000 that his grandfather gave him. He now has a theater in his name, doing the things that he loves to do every day. He never had to go out and get a job. He never had to do anything, all because he had wealth in his family. Now he's operating a fully functioning business off the inheritance money that his grandfather gave him.
Wow.
You know what I mean?
Yeah.
Like, how dope is that?
I know. I don't have any friends that have inherited
That type of money,
Yeah.
And so that's the importance of the things we're talking about. So Nicole, one of the things that I always see, right, and my clients have been doing this for years before we talk to you, obviously, was leaving their children as beneficiaries. So they'll say, "Mr. Smith, I want to leave this all to my kids." The kids are 11 and 12 years old, right? Sometimes a lot younger. And I just write it in, like, all right, fine. Then I talk to you, and you gave me some profound,
Yes.
profound wisdom. Please share.
Do not write minor beneficiaries into any beneficiary designation form. The issue is when you pass away, and let's say the surviving parent calls a life insurance company and says, hey, my spouse passed away, the life insurance policy is in the name of our kids, beneficiaries, what do I need to do? The first thing they're going to say is, okay, because they're minors and they can't inherit any property in their name, we're not going to write them a check. We need a court order so that we know you have the authority to receive this check for the kids. And the common response to that is, why can't I just show you my birth certificate? I birthed the child. Why can't that suffice as the authority that I have to receive the check? No, because there's a lot of people walking around that have names on the birth certificate that do not have rights to their children. So they don't want to get involved in family matters. They just want authority from a court to say, this is a person that is entitled to receive that property. So that is what we call a guardianship.
Gotcha.
In the legal world. So that's not cheap.
Okay.
I'll give you an example of what that means when I say not cheap. For our firm, we charge a minimum $2,500 retainer.
Hold on, but that money can come out of the future policy, right?
No. I'm working.
So you mean to tell me I gotta pay for this funeral, that you just died, and my kids own this life insurance policy, and I gotta pay you an additional $2,500 before I can even get?
Yeah.
Oh wow.
Yes. So I need my retainer now.
Yeah.
Because I'm doing the work.
Gotcha.
You may be able to get reimbursed later, but because I'm doing the work now, I want to get paid now.
Makes sense.
So yes, I ask for at least a $2,500 retainer. It can be more at the end as far as my fee or less, depending on how much work is involved. The process could be at least 6 months before there's a hearing date. And it's simple. Once you get the order, you're just sending it to the life insurance company, but you have to know that ahead of time. Gotcha. So a lot of people don't know that. So that's the hiccup. And then once you have something like that, the issue is once the court is involved in a guardianship proceeding, they're going to be involved throughout to the end where the child is 18 or 21 and the money is distributed to the child. Gotcha. So just because you received the check, because now you got that guardianship order and you're the person that's receiving the money, doesn't mean it ends there. Now, as the surviving parent, it doesn't mean that that's a bank account I can just write checks out, even if it's for the minor child. You have to go to the court here in Maryland, for every request to withdraw.
Going to your parents.
Going to your parents, yep.
Like ask for allowance.
Yep, and they'll determine whether you're going to get that check.
Crazy. So that's an important piece.
Yeah.
That's an important piece. I appreciate you for bringing that to mind because I didn't know that.
Yeah, the issue is you end up spending more money after.
Yeah, of course.
Afterwards.
You charge $2,500.
Right. So just do the right thing ahead of time.
Right.
The right thing is not just trying to figure out, let me just call and see what do I need to put on the life insurance policy. It's getting a consultation.
Gotcha.
Finding out what it means, what you're doing. Because you don't want to go off of just researching, Googling something and seeing what everybody else is doing. You want to understand what words you're writing down because that's it. When you're gone, that's it.
All right, Nicole, I want to thank you. We talked about a lot of good stuff today. It's a good conversation. Hope the people learn something,
They should.
Again, I'm William Smith. I can be contacted at legacyempowermentgroup.com.
And I'm Nicole Slaughter, and I can be contacted at bsgfdlaw.com.
Thanks.
Thank you.